I think the sentiment, again, is very weak. So basically, if you talk to the hedge fund managers and the domestic investors, they are most likely in a risk-off mode. So I would say the volatility should be lower than the previous 2 months. One is if you look at the renminbi devaluation, if you like, I think if it further devalues 10%, then we have to start worrying about it. But anything in terms of magnitude less than 10%, I don't think it's going to cause any big material change to the export sectors. And in terms of economy and sentiment, if you like, actually China is not as bad as many people think. One example, if you go to the movie theater, the cinema, if you like, they are packed of people. Look at the July figure. Year on year, the cinema box office, they went up by 49%. So domestically, people are spending, they are going out. So I don't think it's as bad as people think.
With the correction, we have an improvement in one factor that plays a role when you assess markets, and that is the valuation. That, for example, Hong Kong 8 shares, which are, of course, Chinese equities, is certainly among the cheapest in the world. That doesn't guarantee that they will perform well in the near term, but it does mean that they are attractive, and that is certainly the case right now. No, I would expect within that context them to rebound, but if you compare it to the US, Japan, or Europe, these markets are quite clearly over the past few years in a nice and robust uptrend. So the preference would still be tilted towards these markets, but again, excessive negativity on the emerging markets is certainly out of place.
We're seeing better data here in the States. We're going to see better data out of the Eurozone and Japan. I think in China, you're going to see stabilization there. We've got a 6.8 GDP number out there that we feel good about. So I think what's going to happen is, as we try to find this bottom, some of these issues are going to be cleared up, or at least be a little less dramatic to the downside. So those all certainly contribute to volatility. But I'll tell you this, Melissa, retail investors are underinvested in stocks. They're sitting on too much cash. What we've been telling our clients is this is an opportunity. I mean, valuations, they're not even at 16 times. The median's, 16.7 times over the last 30 years. If you believe that things are improving here slowly, which they are, and things are going to improve abroad, this is an opportunity to step in, buy these sectors like consumer discretionary, like technology, and like industrials, which, believe it or not, have been outperforming since the middle of July.